I do think that there's a risk that if Bitcoin is not easy enough to hold, and that not enough people are educated about it, that they're more
Mhm.
likely to hold it through those indirect methods, which then gives
Right.
those custodians power.
Yeah.
It's kind of a similar thing that happens with stocks, right? If you're an individual stock holder, you have votes over, shareholder proposals and things like that.
Mhm.
But if you hold it through Vanguard or BlackRock passively, then basically you're giving your shareholder votes to them.
In a recent interview with Natalie Brunell, Lyn Alden shared her insights on how inflation and money printing impact Bitcoin. She provided a detailed analysis of the current economic landscape and discussed Bitcoin's potential as a hedge against economic uncertainty in volatile times. During the conversation, Bitcoin was trading at approximately $888,000, reflecting a 3% decrease over the past 24 hours but a notable 33% increase over the last 30 days. Alden's perspective highlighted how these economic forces could shape Bitcoin's future role in financial markets and its appeal as a store of value.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
And so
Right.
Bitcoin's not quite the same way because it's not actually voting. But as someone who can hold coins yourselves and make a decision if there's a hard fork or otherwise be involved, um, I do think that's a long range threat to monitor. I don't consider the numbers problematic at the time. We also look at things like mining pool centralization. So even though miners themselves are pretty decentralized, there's no miner that has even double digit percentage of the hash rate. Um, but mining pools themselves are fairly centralized, and the good news is that miners have, they're not like it's not like they're letting the pool custody their machine. So if a pool that they're using does something they don't like, they can redirect their hash rate to another pool.
Mhm.
So I don't really consider that problem existential. But there are a number of risks I monitor. I also monitor things like supply chain risks for like, ASICs,
Oh
which
yeah.
that's not something we covered in this particular paper. So there are a number of risks that I monitor. As far as you mentioned like Jameson Lopp and just the general views and concerns out there. Basically, the two camps in general, and there's a spectrum of camps, obviously, but the two general directions are one is that some people are concerned that there's still low hanging fruit changes to make to Bitcoin
Yeah.
that would make it better with little or no downside.
Mhm.
Um, and then there's others that say even those, and to go back, those would be concerned if we just stop changing here and only do non-consensus upgrades now and
Mhm.
never have some of those additional features that might make it more private, more scalable, more usable
Mhm.
without sacrificing, core things like decentralization and security.
Right.
Um, Whereas conservatives would argue that even those small changes are risky, that it's hard to fully know um, what implications they might have, um, and that they either lean absolute or pretty close to absolute for we don't really want any more changes, and that the more it ossifies, the better. So one of the things we actually did with the paper was we reached out to major ETFs and major corporate treasurers. We reached out to developers, reached out to influencers, kind of a bunch of those different stakeholder groups. And for some of them, we're able to name them in the paper, and some of the other ones we can't name them in the paper, but we can just say we went up to very, very large
Mhm.
entities, major exchanges as well. So kind of all across the gamut. Um, Generally and we also had legal experts review it because there's perspective, you could you can look at the ETF's perspectives and see how they might deal with something, or you can look at a corporation's like articles of incorporation to see if they might have language for how they determine something like that. In general, if there's a hard fork, individuals are able to move faster than organizations on average. Generally, the bigger organization, the more kind of legal risk they might have, as well as the more entities that would have to agree, right? You might need the board of directors to agree, or you might need, kind of multiple layers to agree. Whereas, if you're just holding Bitcoin on a cold card, you can make your decision on the spot as an individual. And so I do think that it's interesting that there are kind of an increasingly probably passive amount of holders
Mhm.
compared to what you would have had back in say the SegWit
Yeah.
days. Um, and that's not to say that. So in our analysis or from reviewing, those running the ETFs or those running the corporate treasuries, they would be very aware, most likely,
Right.
of what's happening and wanting to generally do the best for their shareholders or their their customers. Whereas probably a lot of those shareholders or a lot of those ETF holders are the ones that are more likely to be in that either apathetic camp or just unaware camp, or just not having a very strong opinion on something software wise. I mean, I remember back in 2017 when I was newer to the space. That's when I wrote my first public Bitcoin article, was in 2017, and I didn't have a high conviction view on block sizes. I was like probably the original one, but I don't really know. Like I
Yeah.
didn't do like a really deep dive at that point yet. I kind of
Sure.
inched into it over time. Um, and so there would be a lot of people in that camp that say, both sides sound reasonable. I don't really know. I don't study this, right?
Yeah.
So just I'll let it play out. And so yeah, you can have fairly passive changes. Another thing we kind of identified is that those six stakeholder groups, their level of power changes throughout the course of a potential fork, right?
Hmm.
So in a hard fork, investors are extremely powerful. You can just rapidly sell the coins that you don't like and stick with the one that you're defining as Bitcoin. That could be the old one in many cases. That's kind of the incumbent. Or if there's a high conviction that the new one is actually better, you could, in theory, have the newer one, the hard fork, win. Um, and so that's like kind of the unlimited power almost. Whereas in a soft fork, investors don't really have much power up front. And so you have influencers, developers, economic nodes, miners. They're the ones that actually have a lot of influence in that early part of a potential contentious soft fork. And then only if there's something like a bounty claim that then
Yeah.
results in a hard fork would then investors really step in and kind of reclaim a lot of the potential power that they have. In addition, they'd have certain powers such as funding developers one way or another, or maybe funding influencers, or otherwise using some of their wealth to maybe influence something. But their actual direct ability is kind of limited until it becomes a hard fork.
Lyn Alden has just highlighted the challenges posed by inflation and ongoing money printing. Now, let's delve deeper as she explores how these economic factors could influence Bitcoin's future and what key considerations investors should keep in mind during these uncertain times. Let's hear more from Lyn Alden.
So I generally think that the kind of the flow here is that the bigger and more decentralized the network gets, the harder changes come. So we talked about before that in the very beginning, Satoshi could just make a change, and then maybe 5 years in, it wasn't he was gone. It wasn't that simple anymore, but it was still a fairly small, close knit group. Whereas now it's now we're at the sovereign level and the ETF level and the global
Right.
level, so changes are harder. I generally fall somewhere in kind of the moderate conservative camp, which is that I'm pretty conservative with changes that I see. If I put myself as a stakeholder, I'd be somewhere between investor and influencer. I'm not a developer. I'm not writing code to make the changes. I can just, if there's a hard fork, I can sell the coin I don't like, and I can give my opinion to audience, and they can take it or leave it. I could fund developers one way or another. So
Hmm.
those are the way that I would kind of influence some of that. But in general, I kind of fall on the side of, you know, Bitcoin's near immutability is a really key feature. That the last thing you ever want to do is break or disrupt Bitcoin. But I am generally convinced that there are small changes, they're fairly conservative soft forks, that can probably add new features for privacy and scalability that
Hmm.
don't really take on a lot of risk, whereas there's maybe other changes that I would view as more progressive or more unbounded or like less bounded, where I would say that I don't really have the technical assurance that that would be safe, and therefore I would default toward no. I think that I don't like to view it as invincible, but it is quite strong. So I still like to monitor risks. Even if there were a 51% attack, um,
Hmm.
one like for example, in proof of stake networks, if some entity gains like a supermajority, they can make that permanent because they can make it so that new stakers can't even enter and try to wrestle that back. So that
Hmm.
you really kind of have to do a fork to fix that. Whereas in proof of work, you in theory can get out of a 51% attack by bringing more hash rate online. There's, it's not like that 51% majority can prevent new miners from attaching to the network in the same way that stakers can. So whether it's preventing 51% attacks or whether it's preventing malicious bugs that otherwise disrupt or damage the operation integrity and kind of reputation of the network, I think those are risks to monitor. And that's kind of one of the arguments for the more conservative side is you want to keep it as simple as possible to reduce attack surface. Whereas, to some of the more progressive arguments are basically saying that, kind of to your earlier point, if Bitcoin is not flexible enough and therefore kind of just congeals into major custodians, then it could fail to kind of achieve its network. So you can actually lose decentralization in that way as well. And there's some sort of balance that I think Bitcoin is currently either at or close enough to. But I don't think people should really rest on their laurels. I think that you always want to be monitoring risks, and you always want to be seriously considering kind of low-hanging fruit changes that might make Bitcoin better. I mean, some of the things we have today, like the Lightning Network and other features, exist because of prior soft forks. And so if you had kind of not changed from that point, Bitcoin would look very different and maybe not as usable today as it is. And I can imagine 5-10 years from now that there's maybe some pretty conservative forks, and then people look back and say, I'm really glad that happened because we have this more usable network now that allows us to use it more privately or use it as medium of exchange more easily and more economic costliness. So I'm in general, I have my opinion on any given fork, but the paper itself doesn't take a side in terms of conservatism versus progressivism. It just kind of lays out the field as we see it. And the one thing we do actually is we also open source the paper. So it's on GitHub. And so we're not really kind of presenting ourselves as like, this is how it works. It's more like we did initial work over months. We reached out to like I said, all the exchanges, like not all, but like a lot of major exchanges, ETFs, corporate treasurers, developers, application developers, all sorts of different stakeholder groups. We put in a lot of work to kind of, have the initial draft that's out there. But then we're inviting people to either contribute to it or even consider being maintainers for the document, because we consider this just a start. It's a living document that tries to analyze what are the risks and changes, how do changes even occur, so that it increases the odds that, that should any changes happen, that maybe they'll be safer.
Lyn Alden offered valuable insights into how inflation and money printing are affecting the economy, as well as Bitcoin's role as a potential safe haven asset. We'd love to hear your thoughts on this. Do you think Bitcoin can protect against inflation? How are you preparing for potential economic changes? Let us know in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.